Hi, I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Wednesday, December 15th. Stocks on Wall Street opened lower amid continued fears about Europe's debt crisis and the latest reading on U.S. inflation. Consumer prices ticked up just slightly in November, in line with expectations. The small increase was due to tame energy prices. They rose by their smallest amount since June. Excluding food and energy costs, the core CPI also rose 0.1%, its first gain since July. Following the report, the dollar stayed higher against other major currencies, and Treasury prices paired their gains.
At the same time as that inflation data came out, we got a strong reading on manufacturing in the New York region. The Federal Reserve's Empire State Survey shot up 22 points this month, following a negative reading in November. Economists had expected a much smaller increase. And another report on manufacturing also came in better than forecast this morning. Industrial production from U.S. factories, mines, and utilities rose 0.4% last month. And capacity utilization rose to its highest rate in more than 2 years. A good sign for activity going forward.
The positive economic data is doing little to boost the stock market. It's still being dragged down by another wave of fears about Europe's debt crisis. Moody's Investor Service warned that it may downgrade Spain's credit rating because of its high debt burden and refinancing needs next year, and increased concerns over its government's ability to get the country's public finances into shape. The news comes just a day after Standard & Poor's issued a similar warning about Belgium's debt rating.
Novartis is one of the day's big stock movers, both on Wall Street and in Switzerland. The pharmaceutical giant is buying the 23% of eye care firm Alcon that it doesn't already own, for $12.9 billion. The deal is boosting Novartis shares by 7%, and Alcon is gaining ground as well.
Another big mover thanks to M&A news is Dynegy. The utility company agreed to a buyout offer of $6.6 billion from Alcon Enterprises. Carl Icahn topped an earlier bid from buyout firm Blackstone Group. Under terms of the deal, Dynegy has until January 24th to seek out superior proposals. The stock is jumping 4% in the early going, already above the $5.50 a share buyout price.
Finally, one stock decliner to tell you about. Shares of Yahoo are dropping after the internet giant confirmed that it's cutting 4% of its total workforce, or more than 500 employees. The move is part of a broad restructuring under CEO Karl Bartz. That's the latest from Weiss Research. Have a great trading day.